Hi, Jeff White here. I'm with John Balukas from FinQuick Finance, and today we're doing something that's probably long overdue from our company's point of view. Is we're covering quite comprehensively today some scenarios of finance, and I'm going to bring you straight across to John Balukas right now on some typical scenarios. Thank you.
Thanks, Jeff. Basically what today's environment is in regards to the financing, the Consumer Credit Code and the Code of Banking Practices has really changed things and really mixed things up of late, especially from the beginning of this year. What we've done here is just giving you some examples of what the specifics that we talk about when we're talking to clients in regards to the benefits of financing new or used equipment. Typically, the first thing we do is look at the scenarios of a client's individual or business acumen. Are they in a current ABN? Obviously, if it's a yes, it ticks a massive box. Has the business been operating for more than 2 years, or if it's less? We've got various questions we can go through. But the other thing here is, and the most important thing is for business, is if you are registered for GST. That opens up a Pandora's box for us, but it is a fantastic opportunity because we've got a number of financiers that can help us through that. So please don't ever not think you can get finance in that scenario. In today's economic environment, we look at the scenario of a chattel mortgage. The chattel mortgage is specifically a contract where most of the clients will want to obtain their financing in that source. We're also able to do lease and rent-to-buy products. Again, specific to the different clients' individuals' needs, and we can run through those as required. But the biggest reasons why a person is trying to buy something is to claim it through their business. Again, the GST, the depreciation and the interest are components that they can most certainly get the benefits from a chattel mortgage. And again, from payments from either 12 to 60 month terms of what we've got and the flexibility from our point of view there. But as I said, basically from our point of view, we give a large array of opportunities for businesses to obtain finance in today's economic climate. Thank you.
John, too, one of the things just I noticed here too, and I find this a lot, people typically go to a dealership, buy a vehicle, then ring John and say, I've done the financing already on the vehicle, but this is where the problem lies. Ring John, tell him what you're about to do, because both those components need to be married together. A lot of people get caught out with that because we don't want two finance companies on, one on the truck mount, one on the van. So that's highlighted in this section right here. But I think that's one of the main. Always do yourself a favour, because the rates have never been so good. I've lived through 18% home loans and God knows what back in the bad old days. But there's no reason this day and age why you're running around in old equipment when you've got rates as low as what they are, reliability and equipment, vans. You don't have to put up with that. And contact John, but see your positioning before you go forward on any capital equipment. We're going to move to a couple of typical scenarios that may help you just see exactly how easy it's going to be. John, I've got a situation now with a customer who actually owns his own van, but he would like to go into, say, a $30,000 truck mount, something like we've got up on the board. Steps for that?
Well, the great thing about this is that the van, as we spoke about earlier, Jeff, that you highlighted, that alleviates any financial problems with the other financiers for security points of view. In this situation here, I've given you an example here for $30,000. In the scenario 1 section here, I've got over 60 months, which the terms of an age and term combination, they tend to be somewhere between 15 and 20 years with some of the financiers. So it's a very, very basic scenario. A brand new system at over 5 years would give you payments of approximately $570 a month. If you want to break it down a little bit further, at $131.66 per week, or even further, $18.76. I'm sure your clients can afford that. I'm not sure what that equates to in regards to a job per week, but I'm assuming they'll be able to do that in a day. The scenario 2 I've also given you just to give it a bit more of an opportunity if they want to budget even further. is a situation over 5 years with a balloon. A balloon is a percentage of the price of the vehicle, the equipment that's added to the end of the loan. So we're taking $9,000 of the 30 and putting it to the end of the contract, which that brings down the repayments down to $436.13, or $100 a week, or $14.34 per day. Again, you can equate to how that works out. The beauty about the balloon here is the fact of the matter is that the equipment will definitely be worth $9,000, Jeff, I'm sure, in 5 years' time. The client has three options. In a sense, they're able to A, write out a cheque if they've got the cash for $9,000. B, trade it in, and I'm sure you'd like that for them to come and buy another one.
Yeah.
Or three, we can refinance it to similar payments again to what you're currently paying at the moment. So your budgets are within reason if you wish there. But just to break it down a little bit further, and please, I'm not an accountant, so these are the specifics that I've got to highlight, that this is just for individual needs for you to understand that these are the financial scenarios that will happen, and obviously you'll speak to your accountant about it. But in this example here, there's a GST component, and again, if you are GST registered, you'll be able to claim this, the $2,727.27. On top of that, I'll talk about that in a bit more of a second, the interest that you've paid on the scenario in the first would be equating to $4,232.40, which in most cases will be 100% deduction for the business. And scenario 3 is that if you were doing it with a balloon, and you'll be paying back a total of $5,167.80. Again, depending on your account's specifications of deductions, you should be able to get that fully back. The depreciation, again, because you're depreciating the $30,000 over the 5 years, you should be able to claim over almost half of that, because the depreciation schedule of ownership, it can go up to 15 to 17 or 18 years with the tax department. So that's why I said over half of that within the first 5 years, you should be able to get most of the claim of the $30,000. So in a sense, if you look at all the numbers here, it is a very viable way, instead of using your own cash, to finance. Because once the $30,000 is out of your pocket, it's gone. Yes, the value of the goods will still be there in 4 or 5 years' time of, say, $10,000, $15,000, $20,000 there, but it's a situation where once the cash is gone, you've got no tax advantages, especially in regards to the interest that you pay, and giving the availability of the depreciation for that as well. So realistically, that's a wrap in that respect there. It's more than reasonable to show that we could possibly do better, because as Jeff said, at the moment rates have never been better. No. The financiers are eager to get financing done, and it's one of these things that we allow the clients to really work with their own budgets, and I'm sure we'll be able to find a portfolio that will suit you.
John, just one point too. A lot of people with that GST there, like typically if you're owing, say, $5,000 on your next BAS, this is offset. Could you explain that, John?
Yeah, so using your example, if you've got $5,000 to pay to the tax department, and you've purchased any goods during the course of the quarter, that $2,727 will come off that $5,000. So a net effect of about $2,200.
So you're only paying the difference, aren't
You're paying the difference,
right.
yeah. So if you owe them $5,000, you're net affecting that, so you only owe them about $2,200 in that respect there, and any other deductions you've got. So in some cases, the businesses do, in a sense, receive a refund back, which I've noted here as well, because they've expended the quarter and done that. And the other thing as well, and what I did forget to say, and it is very, very important at the moment, as much as the depreciation is in this part here very cost effective, the reality is, in this financial environment, it's a situation where you should be able to claim the full amount in this financial year, because the tax department have actually brought in a ruling that they will claim the full depreciation benefit in this financial year.
Fantastic.
So that's another point which I should have mentioned before, but again, under normal circumstances, that's the scenario.
Excellent. We've got one more situation we're going to reflect on. Just this, our next situation, as you can see illustrated up on the board, this is typically someone wanting to purchase a new van, new equipment, but what often happens, they may want to wrap the vehicle, they may want to have a customised undercarriage fuel tank. There may be a few scenarios they might like to put. So John might reflect on this situation here. Thank you.
Jeff, you highlighted earlier about the van and equipment when it's being purchased. The most important thing from a financier's point of view is their security. The security being the van, because the equipment's being bolted into the back of the van, whoever the financier is for the van will take first preference over the equipment. So if you've got two different financiers, the second financier will in effect lose their security. So that's the reasons why in some cases it's very, very important that they do speak to you or myself before they embark on purchasing the van and equipment, if they want to upgrade and what forth. The biggest point here though, Jeff, again, as we said before, rates have never been better, and what we're able to do is achieve exceptional rates because of the fact that it's being purchased in a van. We can play with it, with some of the financiers with their interest rates, because you've got different rates for vans and equipment. So as an example, what we've done here is giving you a $60,000 package. Again, from the previous scenario, giving you two scenarios of one without a balloon, I should say, and one with a balloon. Again, the balloon is the percentage of the purchase and deferred to the end of the contract. So in regards to a $60,000 purchase, you're looking at $1,141.09 over a period of 5 years, or $263 per week, or even further, $37.52 a week. Again, I've given you an example by way of a balloon of 30%, so again, tax advantages and the ATO rulings. Again, over 5 years is $872.26, 201, and just under $30 per day. So again, I'm sure your clientele will be able to budget themselves in an area where they're looking at. Now, the biggest thing, as I said to you before, is the end of life of the contract. Again, pointed here in regards to the refinance or trade in or trade up or pay up the loan with your own funds. Again, a lot of people don't have $9,000 or $18,000 in this instance at the end of the term. We can most certainly refinance the loan to work out to payments. Again, it's similar to $872 a month in that respect there, Jeff. So we're able to give you the best opportunity to get to the end of the contract, because I'm sure the van and the equipment will last more than 5 years.
I did that, John. That situation with our new vehicle, in the 5th year, I had a letter and then I just ran it out for another year.
Yeah,
it was just another year trading and that was gone. So I didn't have to find that big lump sum.
Yeah.
I just ran it on.
It happens all the time, Jeff. It really does, and it's one where clients are comfortable if they're not doing as many kilometres in the van, and the van's service. I mean, obviously with warranties and all that, the way things are today, they're extended from what they used to be in the past. So the machine and the vehicle will be most certainly as valuable of $18,000 at the end of the term of the contract. One of the points again is the tax advantages again from this point of view. If you're looking just at the van alone, you've got the GST component of just on $2,500, and then the $2,700, and so you're looking at about a $5,300 deduction for the client in this budgeted BAS quarter. So again, as I mentioned before, if they've they've had a receive of further funding, they'll have a better benefit of being able to receive a refund if that's the case. Again, the scenario is the same as what I've got, $8,400, $10,335 of interest in these both examples. And again, it's 100% deduction, especially if it's got wrapping all over the van and it's being used for 100% for business purposes. So they're the costs there. So again, the beauty about this is you've got the double whammy here of the deduction in the financial benefit of the depreciation, because at $30,000 is your guide here. So again, it's a $60,000 write-off at the end of the thing.
And typically a van, some vans are up to 4-year, warranty periods.
Yeah.
And even our equipment is 2 years interest. You've got your warranty, you've got parts, labour warranty, which was unheard of 10 years ago.
Yeah.
I mean, it used to be all pro rata. So vehicles warranties that's trouble-free business.
Yeah.
Makes perfect sense.
Yeah.
John, anything else we've missed here?
Not really, Jeff. It's one where the best thing to do is get in contact with either Jeff or myself. We'll
Just to see
explain
your
it. We'll explain
affordability.
it. We'll get a pre-approval. Pre-approval doesn't cost you a cent.
No.
It gives us a time to sit down with the client or even over the phone or whatever
Mm.
and understand their individual requirements. And we'll package a portfolio for them that they're going to be very, very comfortable with. Because the last thing we want them to do is to be unhappy with the financing package
Exactly.
that they've received.
And I couldn't believe the other day we did a portable package for about 11 or 12,000. Well, I think it was about what $50 a week.
Yeah.
I mean, nobody misses $50 a week these days.
Exactly.
So affordability's there. There's no need to put up with antiquated equipment that's embarrassing on the job. Open the door, all the gear falls out. All those days are gone. It's all fully affordable, but you really need to do your homework. Give John a ring. Just see where you're comfortable before you make any moves at all. Thanks very much to John
My pleasure,
today
Jeff.
and myself, and we hope to talk to you in the near future. All the best.
Thank you.
Thank
And
you.
looking forward to hearing from anyone who needs to contact me regarding any finance requirements. Thank you.
Thank you.
Thanks, Jeff.